We'll kindly request if you can take your seats as we begin our session this evening. Hello.
One or four? One. Okay. Can you ensure that this is on one? And then what will happen is that his voice will directly come into this.
Okay. Thank you, Dr. AJ. Good evening, everyone. It's an incredible pleasure to welcome you to our event here at the International Solar Alliance Pavilion. My name is Mkholi Sispanda, and I am an advisor at the Commonwealth Secretariat. Our event this evening is entitled Accelerating Financing to the Solar Sector in Commonwealth Countries. We're in sunny Africa, so you will understand the importance of the sun. But more than that, we're at a climate change conference of parties, and renewables are an important part of the agenda as we try to transition to a sustainable economy. However, we all know that despite the huge potential that solar has, particularly in the poorest of the countries around the world, it has been least deployed in those countries. The statistics indicate that South America and Africa hold a potential of at least 7.5 kilowatts per hour per square meter of solar, but none of that has been deployed or utilized. And in Europe, where the potential is much lower, that's been, the deployment has happened much faster and better. So we have this paradox where, as it were, the places where you could say there's a gold mine of solar, still have not tapped any of that potential, despite the technological advances, the reductions in prices, and the political momentum around the SDG 7 calling for clean, affordable energy for all. What is the problem? Part of the problem, we think, has got to do with the financing for solar. The investment into solar has been quite limited. For example, in Africa, 0.6% of the global investment into solar has only been realized. And so there is a lot of work that needs to be done with regards to that. As the Commonwealth, and together with ISA, we are in a partnership to try and provide solutions to this challenge. And so we are very delighted this evening to have all of you joining us, and some might be joining us virtually to this very important occasion. Our program tonight will start off with high-level remarks from the Secretary General of the Commonwealth, Right Honourable Patricia Scotland. And we will also get some opening remarks from Dr. AJ Mathu, the Director General of ISAM. We'll then move on to just talk about, have a presentation on the key issues limiting solar uptake, the challenges and the opportunities, which will be a prelude to a discussion giving us country and institutional perspectives on the subject. We will wrap up with a question and answer, and so encourage many of you in the audience to listen carefully, and so that you will be able to engage towards the end. So it is my singular pleasure this evening to invite the Right Honourable Patricia Scotland, the Secretary General of the Commonwealth, to give her opening remarks.
Well, firstly, can I say what a great honor and a privilege it is to be with you. And I want to say the warmest thank you to my dear friend, the Honorable Director General of the International Solar Alliance. But distinguished speakers, ladies and gentlemen, good friends, a very good evening to all of you. It's my pleasure to warmly welcome you to this side event on the topic of accelerating financing to the solar sector in the Commonwealth countries, hosted in collaboration, as you know, by the International Solar Alliance. A happy note is that the presence of esteemed representatives from the Commonwealth member states, International Solar Alliance, partner organizations, private sector representatives here, and of course, other stakeholders. Many of us will remember Glasgow a year ago, when we came together and looked at what we could do for the green economic recovery. And that is very much, I think, still in our minds. But now we're going through really turbulent times. And we thought COVID was the most difficult thing that we had to face. But look at what has happened since COP26. We've had political tensions, energy prices are swelling. We are also witnessing several climate-induced natural disasters. From the Pacific, we've had Tonga with the underwater volcano. But Africa, that's Nigeria, Gambia, South Africa, flooding which has taken so many lives. In Nigeria alone, 600 people died, 1.3 million people were displaced, 3.2 million people affected. But look at Pakistan, 33 million people displaced, $40 billion worth of damage, 1,700 people died, and we have more than 33 million people affected, 16 million of them are children. So we are in a very difficult position whereby 115 people die every day, and we're from climate disasters, and we're suffering about $202 million per day in terms of damage. And on top of all that, we've got desertification and drought, and the World Food Programme saying that we are surrounded by a ring of fire. More people hungry than ever before. So global hunger now a reality. So we've never needed solar energy more than we need it now. Being the largest emitter, decarbonizing the energy sector is one of the most critical strategies under the NDCs of member countries. Clean energy can mitigate the energy access challenges to several of the least developed countries and small island developing states in the Commonwealth that lack access to modern energy for a significant portion of their population. And member countries need to provide energy access at an affordable rate. The citizens demand it. And at the same time, we need to meet their NDC goal on energy transition. Unfortunately, the adoption of clean energy is much slower than desired. One of the critical challenges to the adoption of clean energy is appropriate and timely financing. And by the end of the 2020s, annual capital spending on clean energy in emerging and developing economies needs to expand by more than 7 times to above $1 trillion in order to put the world on track to reach net zero emissions by 2050. So whilst developed nations do not face any significant barriers to solar investments, the LDCs, the SIDS, and the middle income countries face numerous challenges in attracting private investment into clean energy sector. So without large scale intervention by global public institutions, it is nearly impossible for developing and the least developed countries to mobilize the required amount of capital to meet the energy needs. And these countries' reliance on fossil fuels and any expansion of fossil fuel energy will jeopardize the global efforts to decarbonize the energy system. And carbon mitigation is a global public good, so it warrants large intervention of the global institutions. And I'm glad to know that ISA is aspiring to mobilize $1 trillion of capital for solar projects in developing and the least developed countries, small island states and the middle income countries by 2030. It is for the exact reason that the Commonwealth Climate Finance Access Hub, a successful, tried and tested initiative of the Commonwealth Secretariat to support small and other vulnerable member states to build human and institutional capacity to access all sources of funding to implement and scale up climate action, including solar projects. The hub, which was launched in 2016 when I became Secretary General, has already supported member states to mobilize 56.3 million of climate finance. And it's important to know that we've done that with a tiny amount of money, 1.5 million. And we have almost $850 million worth of projects in the pipeline. The Commonwealth Climate Finance Access Hub has been able to support 17 countries in their climate finance mobilization efforts. And we've built a pipeline of 118 projects. And we've launched sustainable energy transition, we call it the CSET agenda of the Commonwealth, to enable our member states to work together to fast track an inclusive, just and equitable transition to low carbon energy systems across the Commonwealth. Thus, in closing, I call upon all of us to continue to work better, faster, smarter, and together to accelerate financing to the solar sector and meet the financing gap that will enable a transformational shift to clean and affordable energy use. We can do this. We must do this. And I want to thank all of you who are here today to be part of that solution, because I believe together we will be able to make a difference. And with these few remarks, I thank you again for the remarkable attendance, and I look forward to engaging and really fruitful events. So thank you very much indeed.
At this juncture, please allow me to request Dr. AJ Mathu, the Director General of the International Solar Alliance, to give his opening remarks.
Thanks so much. Thank you. Madam Secretary General of the Commonwealth, the Right Honorable Patricia Scotland, members of the Commonwealth Secretariat, ladies and gentlemen, I can't tell you how delighted we are to host this event here in the ISA Pavilion. Our relationship has now deepened and institutionalized. We are delighted that one person from your organization now sits with us. It's providing a huge amount of help and guidance to our work as well. It adds to the rigor. As you very rightly said, we have seen large amounts of funding come into the solar sector. Last year, in 2021, the amount of resources that were invested in solar globally was $200 billion. This compares favorably with the highest amount of funding that ever has occurred in the electricity generation sector. The problem is that only 5% of it flowed into Africa. 74% of it went into the OECD countries and China. Why? We asked a large number of investors, more than 100 of them, as to what the reasons for this low flow were. And they responded, by far and large, the single largest response was that they perceived that the risks of repayment or the risks of non-repayment were too high. This led us to examine what can be done. And at the 5th Assembly of the International Solar Alliance, held a couple of weeks ago on the 18th of October, the Assembly approved the creation of a risk facility, which would provide the risk mitigation capital that is needed to provide the payment guarantee mechanisms for particular projects. We now will raise the resources that are needed for this payment guarantee mechanism. But what it allows us to do is therefore to look at markets where we do not see funding going there today. This changes the dynamics. And I request everybody here to start thinking in terms of the lower risk perception that investors will now have, and therefore pulling them in, crowding them in, as to use their language, into the investment sector. The challenge also is, where do the projects come from? Because of the Commonwealth financial advisors in various parts of the world, that's where many of the projects spring from. But they also will have to and have convinced local entrepreneurs to provide and develop those projects. The issue is, how do you make an adequate number of investors and entrepreneurs interested in solar energy? And consequently, again, at the 5th Assembly on the 18th of October, one of the other resolutions that was passed by the Assembly related to the setting up of an Africa-wide system for identifying startups. There were 10 problem statements that are being put out. A website has been launched on which applicants can put in the details of their projects, which would lead to the identification of 20 entrepreneurs from Africa who would be handheld, who would be trained, and who would be introduced both to investors on the one hand and to technology providers on the other hand. We believe that these two things of finances, greater amount of finances moving into this geographical area, as well as a greater number of entrepreneurs developing projects in this and in the African continent would together create the ecosystem within which we look forward to the work of the financial analysts in making this happen. Again, I want to thank you, Madam, personally, and the Commonwealth Secretariat for your strong help, participation, and collaboration, which has made this possible. I am delighted that we are holding this together, and I look forward to the discussions that will follow. Thank you very, very much.
Thank you, Dr. Matthew, for those wonderful remarks. At this juncture, I would like to invite the Commonwealth Regional Climate Finance Advisor, Mr. Labanya Jena, to come forward and present on the key issues for solar uptake, the challenges and opportunities for enhancing finance. Over to you, Labanya.
Good evening, Honorable Secretary General of the Commonwealth and Honorable Director General of International Solar Alliance, our partners, our stakeholders and the audience, and my colleagues at the Commonwealth Secretariat and at International Solar Alliance. In this session, I'll discuss renewable energy financing challenges and what are the solutions we can design with a focus on the solar sector. Next slide. Next slide, please. Before that, I'll give a brief background of Commonwealth Climate Finance Access Hub. Next slide. CIFA was created in 2016 as a Commonwealth heads of the government meeting in 2015 mandate. We have a mandate which distinguishes CIFA from many other institutions because we work closely with the government, and based on the priorities of the government, we develop projects. Second, our advisors are closely embedded in the department and the ministry of the government so that they can understand the requirement of the government better. Number three is that we balance both the human capacities and institutional capacities, which is lacking in these countries, so that once the advisors exit from these countries can stand on their own and develop financial proposal. Number three is that we also build long-term partnership with many institutions, because as you know that in the climate actions, including in the solar sector, there is a need of building partnership so that we can learn from our experience, from our knowledge, so it will be far better for all of us. Then we have also an interconnected network, hub and spoke model, because we have 15 climate finance advisors working in different parts of the world, particularly in 3 regions, including Indo-Pacific, African, Caribbean regions. There are business models and there are financial proposals which can be replicated. We talk to each other and share our ideas as well. And number 5 is that our institution, CIFA, is governed by a steering committee, so which makes it very, very different from the other institutions. Next slide, please. Okay, these are the support mechanism we provide. One, definitely developing concrete mitigation and adaptation financial proposal. And number 2 is policy developments, because many countries, they don't have robust policies and regulations which are required to attract capital for climate actions, which is missing in these countries. We also help and support countries in developing robust policies and regulations. Then climate finance readiness, which is essential for many countries, because the institutions in these countries are not aligning with the terms and conditions asked by the global financial institutions. We are developing these institutions so that they can make themselves ready to access climate finance. Number 4 is accreditation support, because many globally financed institutions like Green Climate Fund, they provide capital through an accredited institutions. Many countries, they don't have accredited institutions, which make it difficult for them to directly access climate finance. So we support this country to set up accredited institutions. Then human and institutional capacity development, which is essential, because what we try to do, as we work closely with the government and the people in the government, we try to build capacity of people who are in the government so that they can develop the proposals once the climate financial advisors exit the countries. Secondly, the institution, including the financial institutions, various departments, they also need to develop financial proposals independently, irrespective whether the climate financial advisor is there or not, which is very, very critical. Then knowledge management and learning, we have produced some fantastic knowledge products, including a tool, climate finance tool, which are currently used by climate finance advisors and other countries, which to access climate finance. Next slide, please. Okay, so we have already discussed about some of the issues. What is the context of solar energy? As you know that many countries in the Commonwealth, they don't have access to modern energy. And if you see some of the countries, the energy access is as low as 26%. At the same time, many countries, they have very, very low energy electricity consumption. In the case of Sierra Leone, it is only 26 kilowatt hour per year compared to global average of 2,757. Similarly, many Commonwealth countries, they have also target to transition their energy sector to 100% clean energy by 2035. And some of the countries also target, they will reach that target by 2030, particularly the countries which are heavily reliant on hydrogen or so. Since we know that energy has a very, very close relationship with the economy, with the health sector and education, it is important to address these challenges. Next slide. Okay, what are the drivers? As you know that almost all the countries, they have a commitment to 100% clean energy. Some of the commitment, they will meet it in 2030. Some countries have commitment that they will meet it in 2040 or so. So definitely there is a possibility to drive renewable energy sector in these countries. And many countries also renewable energy penetration is very, very low, even as low as 20% or 10% in their capacity addition. Then fortunately, renewable energy, including the solar sector, are cheaper than fossil fuel. So it is an additional incentive for this country to adopt solar. Then as Director General as well as the Secretary General said, that many countries, they are still relying on expensive imported fossil fuel to generate electricity. And some of the countries, they are spending around 10 to 15% of their total foreign exchange revenue on importing fossil fuel, particularly when the political tension happened and energy prices shoot up. The inflation skyrocketed in these countries since they are relying on imported fossil fuel. And through renewable energy, also we can address the energy access problems of these countries. Next slide, please. Okay, these are the challenges currently these countries are facing, including the bankability of projects, which Director General of International Solar Alliance already said, because many projects are not bankable. One is that from the perspective of financial investors, they are saying these projects are very, very risky, or it's very difficult to predict the cash flow generation of the projects. Secondly, many state utilities or utilities based in the Commonwealth countries, they are controlled by the state or independently. The credit rating of these utilities are very, very low, which makes very uncomfortable to the private investors to provide capital to these institutions. Then number three is that many institutions, they don't have enough equity capital, which is necessary to raise more external debt capital. Because whenever there are debt capitals are interested, if they see that the amount of equity capital is not enough in the balance sheet, they are also hesitant to provide debt capital to the utilities. Number three is that it is also not allowing the renewable energy company, this state utilities company, to add more renewable energy capacities. And there are also small ticket size projects, particularly in the solar sector. Whenever there is a project size is very, very small, it increases the monitoring, the transaction and origination cost. This kind of cost discourages private financiers to invest projects. Then sovereign risk, as many utilities are controlled by the state governments. So these governments have low credit rating in the international market. Even if they are willing to raise debt capital from the foreign market, the cost of debt is too expensive. Number two is that currently these governments, their public debt level is at a very, very high level. It's nearly impossible for them to raise more debt capital at this point of time. Then there is foreign exchange risk. It means that even if there are foreign investors who are interested to invest in solar projects in these countries, because of the volatilities of the exchange rate, they are not investing in the projects. Next slide, please. Okay, so some of the solutions we can think of, we can design to address these challenges. To make the projects bankable, there is a need of concessional debt capital, particularly from multilateral finance institutions and international climate finance institutions. Whenever there is a concessional debt capital, it will reduce the cost of capital of the projects. That one. Number two is that it can also reduce the riskiness of the project, and it will make the project bankable. Second is grant, because many countries, they cannot, the consumers cannot afford to provide a tariff which is determined by the electricity utilities. In this case, you need some amount of grant capital, which reduces the need of financing from the private sector, which can make the projects bankable. Then there is blended financing, which has been used for last 16, 17 years in the solar sector. But thankfully, the International Solar Alliance is coming out with a blended financing mechanism, which basically smartly blends public capital and private capital to decrease the riskiness of the project so that it can attract the private financing. But one of the key issues with the blended financing is that the public financiers, even the multilateral development banks, they're not taking the risk, the amount of risk the private investors are interested. What happens that they are investing money, but they're not taking any risk. It means that this kind of structure is not helping in reducing the riskiness of those projects to attract private investors. Secondly, there is limited transparency of blended financing structure. It means that from the perspective of public financiers, they need to know the kind of positive externalities created by blended financing structure. But the blended financing structure, they are not disclosing what kind of positive externalities are created by the project. On the other side, the private investors, they don't know what is the risk-adjusted return I'm getting for these kind of projects. There is so much of asymmetric information in this kind of structure. To address credit risk, there is a need of credit enhancement, particularly partial credit guarantee or so. But unfortunately, the partial credit guarantee program currently run by multilateral development banks is poorly designed, in the sense that in the case of partial credit guarantee, the lender should pay a credit guarantee fee to the multilateral development banks. What happens that that credit guarantee fees is too much for the lender, because it increases the effective interest rate for the lender, and it doesn't convince the borrowers to raise capital, even if it is partial credit guaranteed. Second is that the coverage of partial credit guarantee is too low for the lenders to extend loans, even if the partial credit guarantee is available. These two things can be addressed. The partial credit guarantee fees can be subsidized by using public money. And number two is the revenue guarantee. It means that, as Director General of International Solar Alliance says, in the case of solar project, you need to enter into a 20-25 years power purchase agreement. And the private financiers are not very sure whether they will get that money. So we need to create some kind of payment security mechanism, which will give enough comfort to the private investors that, okay, the cash flow is predictable in the next 20-25 years, so that they can come in and invest in these projects. Then there is a need of some kind of credit tranching, which is also essential. It means that you can create tranching the capital structure of the projects, where the senior debt can be taken by the private financiers, but the subordinate debt can be taken by the public financiers. But more importantly, the public financiers like multilateral development banks, they should provide a low cost capital at the subordinate debt. Once there is subordinate position, it will give enough comfort to the private investors to provide debt capital, since there is the seniority position in the capital structure. And as I said earlier, they don't have enough equity capital in the balance sheet. It means that they cannot add renewable energy capacity. In this case, there is a need of infused equity capital either in the balance sheet of the electricity utilities or at the project level. But what happens that public investors, including the multilateral development banks, they stay in the investment for a long period of time, which is not desirable, because the risk is very, very high at the development stage and construction stage of the project. If these public investors, they invest in the projects, and once the project is stabilized at the operational stage, they can exit from their investment and redeploy the capital in the new projects. That's not happening, unfortunately. So currently, this country, they need a huge amount of equity capital to develop those projects, and the projects in which the risk is very, very high. Then the lack of pipeline of projects, which needs a lot of grant capital to originate the growth projects and make them ready for investment. What happens that many projects, they are not at a stage where the private investors are really ready to invest. So it is essential for them to make them these projects ready. And number two is that even if these projects are ready, when you go to any international public finance institutions, they will take years to provide capital. Just to get an approval, it will take 1 year. To reimburse capital, it will take another 2 years. It means that you have to wait 3 years to get the international public capital. That's not the ideal scenario to accelerate the adoption of solar energy. So it means that you need a commitment from the public financer. You need to provide capital immediately rather than waiting for 3 years. Because many countries, they are currently complaining that international public finance institutions taking so much time. It is not desirable for us. Then there is small ticket size issues in the case of solar energy sector. So what we can do, we can standardize the power purchase agreement. We can standardize the loan documents, which can enormously reduces the transaction cost from the perspective of private finance investors. Then these projects can be bundled together and put it in a warehouse and can be sold as a securitized product to the banks and other financial institutions with right amount of credit guarantee. Then in the case of sovereign risk, even if some of the countries, they are willing to raise more capital from the international market, since the credit rating is too low, nobody is interested to buy their sovereign bonds. And even if they are interested, the cost of debt is very, very high, which is not affordable for these countries. So one of the ways the multilateral development banks can make it happen, they can give a guarantee to the sovereign states on the conditions that the proceeds of the bonds can only be used in developing solar projects. That will be the ideal scenario for the sovereign states to raise capital in the international market. Then definitely there is a need of political guarantee. In the case of foreign exchange risk, what the borrowers in this country they need, they have to go to the foreign exchange market and buy swap option. But unfortunately, the cost of swap option is very, very expensive. Even if they raise capital at a rate of, let's say, 4% or 5% from the United States or Europe, the cost of swap could be 8%, 10%, 12%, depending on the credit risk of the borrower. When the cost of swap is very expensive, it is not desirable. Ultimately, the effective cost of debt is very, very high. They are not going to raise any debt capital. In this case, the best way is to subsidize the cost of debt capital, cost of swap, so that these borrowers can be enabled, can go to the international market to raise foreign capital or so. Next slide. Yeah, with this, I'm concluding my presentation. Thank you.
Well, thank you very much, Lapanya, and for that perspective of some of the challenges and how we can address those in terms of solutions. At this juncture, allow me to ask Honorable Right Honorable Secretary General and the Director General to take their seats, and I will ask our panel to come forward and discuss the issues. Our panel this evening is made up of Dr. Sugatha Pal, Mr. Crispin Duvan, Mr. Chanel Iroy, and Mr. Kuhn Peters from the Global Off-Grid Lighting Association. Mr. Chanel, okay, Lapanya, if I could ask you to join now that you've made this wonderful presentation on some of those solutions that that you put forward. Let me start with Lapanya. Now that you've just done the presentation, you talked quite a bit about a partial credit guarantee, you know, and Dr. Mathu as well talked about the credit guarantee program. Could you in light of all the solutions that you presented this evening, discuss a little bit on how that can be better structured to drive debt capital to where it's needed the most.
Yeah, particularly if we see the World Bank kind of institution which was created many years back, they were created to provide guarantee, but unfortunately they are not providing guarantee. They are simply providing loans and equity nowadays. Unfortunately, I mean, only 5% of their capital is used for guarantee or so. So in the case of public credit guarantee, what happens that the MDBs, they will say, okay, we'll provide a personal credit guarantee to a borrower, to the lender, on the condition that the lender will pay a certain amount of fees. Let's say it varies from 1.5% to 2.5%, depending on the credit risk of the projects. So for example, if without credit guarantee, the interest rate is, let's say, 9% or so. With credit guarantee, the interest rate reaches 10.5% or 11%. And the borrowers can raise that kind of capital that at that interest rate from the commercial market. So it doesn't help the borrowers to use credit guarantee by paying the guarantee fee to the MDB, to the multilateral development banks. That one part. Second part is the risk coverage. How much risk coverage is required? Many times what happens that the risk coverage is very, very low, as low as 20%, 25%. So when the risk coverage is very, very low, it doesn't encourage private financiers to provide capital, because they are not very sure whether they can recover the principal amount of their lending portfolio or of their lending. That number two. Number three is that alignment of the lenders, of the guarantors, as well as the borrowers. Sometimes what happens that the MDB, they will say that I have the first rights over the assets, not the lenders. When the guarantor has a first right, it means that all the credit risk is assumed by the lenders, not by the guarantor. It's not the ideal scenario for the lender to provide capital when the first right is with the guarantor. That must be changed. And the coverage ratio must increase more than 50% or so. Because academically, it's also proven that if at any point of time, a personal credit guarantee is less than 50%, it doesn't work in developing economies at all. The lenders are not satisfied with that kind of coverage. And number three is that on the alignment of interest of different stakeholders, it is important that the risk guarantor, they should take the maximum risk as a guarantor, like any insurance guarantee or so. They should not pass on all the risk to the lenders, because in that case, lenders have no incentive to lend capital. Thank you.
Thank you, Lapanya. And that means we still have a number of issues to solve in terms of that. I want to take a slide different and focus now on the countries. Quite a lot of what you spoke about, Lapanya, have implications on the policy environment in countries. And we have with us this evening, Mr. Chanel Iroy, who is the Deputy Secretary in the Ministry of Environment, Climate Change, Disaster Management and Meteorology in the Solomon Islands. Mr. Iroy, you've got your renewable energy roadmap that you recently announced. And it's meant to provide the technical pathway and implementation framework for reaching 100% renewable energy by 2030. Could you tell us what the major reforms you are making in that sector to ensure that that comes along?
Thank you. First, I would like to take this opportunity to thank the presence of the Secretary General here, and also the General of ICE, and also for this opportunity to come and be part of the panelists this evening. Yes, we have recently endorsed our renewable energy roadmap, and in that roadmap states that by 2050 we should have net zero emissions by 2050. So that is the target, and also it's included in our national determined contributions that we submitted last year. So those are the guiding strategy documents that in place that will help us in terms of looking at ways to implement strategies, implement interventions that in place to reach our target. So we're working with the ministry that is responsible for energy that's driving this the roadmap, and also involves the different stakeholders to the private sector, and also including the development partners, but also the different ministries of the government, including the ministry that is responsible for climate change. So that's what is in place. That's the document that's driving this, helping us to look at the ways to reach our target by 2050. And one of them is one of the major interventions that we're looking at is through the renewable energy sector, but also part of that roadmap is to look at how we can support our communities that are in place. Know that our country is staggered, it's staggered with many islands, and you have local communities that needs lighting, needs to provide energy for those communities. And the only way we can provide it for them is through the hydropower renewable energy systems, but also many people are depending on solar lighting systems. And accessibility to such systems, they do not have the finances in place, and there's no provisions that in place that to continue to support them reaching the goals in terms of solar lightnings. But we have a system in place which comes to a coordinated program through the national government, but also there's the uncoordinated part of the accessibility, where it's through the a rural community development fund that's going through the membership of the national parliament, and it's not been coordinated by the national government. So that's one area it's very challenging to us in terms of how we can accountable for the solar systems that the solar power that is provided for the communities. Although we are working in the coordinated manner to the government system to ensure that we continue to provide the energy sector to different institutions, but also those communities who are in needed of energy sector. Thank you very much.
Yeah, thank you very much, Mr. Eroy, for that. We also have with us this evening Dr. Tusita Sugatapal, who is a member of the National Committee on Climate Change Mitigation in the Ministry of Environment in Sri Lanka. And I want to tie that question to your situation in Sri Lanka. And we know that Sri Lanka is spending a substantial amount on fossil fuels at the moment to import electricity. And at the same time, we know that Sri Lanka has a natural advantage for solar. And there's need for adoption of solar in the country. How can international institutions support the efforts to deploy solar in the country? And Labanya, highlighted some of the challenges that come with bringing in international institutions. From your perspective, could you tell us what they could do?
Thank you. First, I'd like to thank again Commonwealth Secretariat and ESA for giving us the opportunity to share our experience, and also indicating what are the challenges we are facing. As you highlighted, Sri Lanka is committed for these climate actions, not only because of the climate, but also looking at our economic crisis we are facing now. We are heavily dependent upon imported fossil fuel, especially energy sector. So in that context, Sri Lanka has been working on renewables by looking at the potentials. So we have done detailed resource mapping for wind and solar mainly. In 2012, we were able to publish the solar potential, which have shown a big, huge potentials there. So at the same time, institutional wise, in 2007, the government has established a new entity called Sri Lanka Sustainable Energy Authority as a single point of contact for the developers to establish power plants. So we had these whole things together, but still we didn't see the things coming out. So for example, now I joined Sri Lanka Sustainable Energy Authority in 2011. There we had only 3 megawatt of solar this time, and around 400 households having rooftop, not a single power plant on the ground. We were able to get some finance from, in fact, grant from the government of Japan and Korea to set up some pilot plants. That's where we started the demonstration of the technology. We got a 1.2 megawatt in total pilot plant. That shows the potential, for the private sector to come in. So they have basically our development so far is basically the domestic financing by the domestic, local companies. So we were able to. I left SLSA after 4 years, 2015. So the number of household from 400 it become 5,000, almost 10 times. But it's still 5,000 and 25 megawatt. That's not also sufficient enough. Of course, it's 10 times, but it's still. Now today in 2022, we have 46,000 rooftop systems, more than 200 times within 10 years, and 650 megawatt of rooftop total, mean 230 times of the capacity. That's the development we had, but still numbers are low, because our target basically to cater for this crisis what we are facing, as well as the climate target, to reach 70% renewables by electricity by 2030, and 2050 the carbon neutrality. Now look at 2030, we are talking about putting up 4,600 megawatt of solar. Personally, we are 650 only. So within 8 years, we are looking at 4,600 of solar. Out of that, around 4,500 on the rooftop, 14 solar around 1,000, and the balance around 3,000 the down systems. So that's where the gap is there. And also we did a NDC progress analysis with the Ministry of Environment support. And we show that to 21-22 so far, our progress in NDC is only achieved for our unconditional targets, our own efforts. It's like out of our target is only 20%. 80% are from conditional. That we were failed to approach. I think that's where the gap is. So we are looking forward. It's not just money we are talking about. It's the knowledge, it's the capacity, it's the maybe technology which we really lack. So that we are really looking forward to see. That's why we come here even. That my presence here is basically that even to see what are the opportunities we have to make those targets, the NDC target by 2030 as well as beyond that. And carbon neutrality is a reality through cooperation, collaboration, and so on. So therefore, we are here to learn from others and see what are the opportunities. So thank you.
Brilliant, brilliant. We do have with us Mr. Koen Peters, who is the Executive Director of the Global Off-Grid Lighting Association, and he's been working on this problem as well through his organization. Mr. Koen, the off-grid energy is critical for developing countries, as you have had through this. My question to you is, what kind of financing do you think is required to meet the funding needs of the off-grid, for off-grid to truly realize the potential in the sector?
Yeah, thank you very much for the question. Can I just ask for the audience here, for who of you is the term off-grid solar in a developing context entirely clear? I see 2 hands going up from my colleagues. For the rest, then perhaps I should clarify what we are talking about here with the off-grid solar industry. we an industry association, we have around 200 members, about 65, 70% of them are commercially trading in off-grid solar products. And we're talking from the solar lanterns that you were mentioning, small handheld products that have a small half a watt to 3 watt solar panel on one side and an LED light on the other side. Next stage up is a product with a phone charger capacity in it, a battery, up to solar home systems where there's a small solar panel, 20, 50 watts on the roof, a battery screwed up to the wall, 3 solar lanterns, 3 light bulbs from the ceiling. It can power a television, can power a radio, and if we have larger systems, it could power a fridge, it could power a hair clipper, some equipment, a sewing machine, whatever. That's the kind of technology that we're talking about, and they often, not always, come with a pay-as-you-go technology embedded in it, Internet of Things embedded in it, so that these products can be switched off remotely and can be switched on when the user pays a daily, weekly, monthly fee to operate that system. What this technology has brought about, which is on the market now for 12, 15 years, is a request of a perception change on the side of governments and energy utilities and energy people on 2 fronts. One, that these kind of technologies can provide meaningful electrification for households. They were originally looked down on as just gadgets, but increasingly we see that these products can really provide the least cost solution for households, where we look at the service that they get out of it. It's not only the lowest cost per kilowatt hour, but it's definitely the lowest cost of giving people access to electricity, to lighting, to phone charging, to information from their television, to a bit of cooling from a fan, etc. So very low cost technology. The other mind change that we're asking from people in the energy sector is to see as technology that is brought to electrification services, brought to households and businesses, not through a utility, but through companies that are providing these assets. The households and the SMEs own the assets often on a business to consumer business model. And that's quite different from what we mostly see in the energy sector. It brings about a different approach towards electrification. We need to think about growth models for markets rather than big scale project development thinking, and it brings about different financing needs. We have companies that start small, that need seed financing initially to develop and prove their business model, equity financing in small amounts to grow to a somewhat higher stage, debt financing when they become larger. In our industry, among our 200 members, we have about half a dozen companies that have become really significantly large, that sell hundreds of millions of products, hundreds of millions of dollars worth of products a year. But we have a long tail of companies that are providing a much smaller amounts. The industry has so far reached around 490 million people with off-grid solar products. That's close to 500 million. That's a lot of people with a lot of impact in terms of energy access. Also climate impacts, climate resilience, climate justice, and the ability of people to get informed when in the wake of natural disasters, to adapt to situations of more droughts and changing climate, etc. Zooming in on the investment angle, our industry has raised 2.3 billion between 2012 and now, 450 million of that last year. This year is going to be higher. Nice numbers, but not nearly enough for what we need as an industry. We as an industry have committed ourselves, and we've relaunched that commitment as a climate commitment really here today, earlier today, to reach 1 billion people by 2030. We're not on track to achieve that. We need to triple our growth, triple our investment to achieve those numbers, but we think we can get there because our industry is on a very interesting experiment, I would say, or trajectory of setting up a real creative public-private partnership approach. An example is Nigeria or Rwanda, several other countries where the governments of these countries with World Bank support, have set up support schemes for private sector to subsidize every product with in the tune of 20% of the product costs, mostly as result-based financing schemes. The company provides those equipment first, then gets paid the subsidy, and the households pay off the rest of the product over time. Really interesting business models that so far have helped us to speed up the growth of the market from where we were originally with mostly everything paid by the customer. Now it's shared costs with public funding, and we see a fast acceleration of the market. And we need to replicate that in other areas. World Bank has told us publicly here at Sharm el-Sheikh at COP that they're ready to intensify their efforts and to replicate these mechanisms that we've seen in Rwanda and Nigeria and other countries and many more countries, and to do follow-up financing like that. That's really good news for the industry and really giving us hope that we can accelerate the market. Is the industry ready then to absorb all the potential? That's a mixed bag. What we've seen is an industry that has partly reached profitability, but rather many companies are not really there because we're trying to sell products to the poorest and most remote customers on the planet, and that's not easy. Many alternative approaches have tried to do that with a far higher degrees of subsidy and have not achieved success so far. So we still need to fine-tune that element of what is the amount of public financing, what is the amount of private financing that goes in. At the moment, I would say the industry is not profitable enough to attract the levels of equity financing in particular that we need. And after that, working capital finance. I saw equity being mentioned as one, not enough equity as a barrier to more investment. I saw also the solution, more equity financing. I like that solution, but I don't think it's as easy as that. I would think the solution here is more public financing to help us improve the business case and the margins that our industry make. And then we will be able to raise also more equity finance. We are hopeful because we've seen the first few companies being really structurally profitable with these business models. We've seen the business cases from the government angle. We're not there yet. We need more public finance. We also think we need more climate finance as a contribution there. And I think it's totally justified given the climate impact that our industry delivers. But this is where we're at. We're on a growth curve for finance. It's not steep enough, but it's hopeful.
Thank you. Thank you. That sounds really, really encouraging, Koen. Crispin, Mr. Crispin Duvan is the program director for the Organization of Eastern Caribbean States. The Caribbean has great potential for renewables, whether you're looking at solar or wind. And again, in that region, adoption has been quite limited. How is OECS playing a role to accelerate the green transition, and what kind of international support does the region need?
Thank you, Mr. Moderator. In cricketing terms, cricket is a game that's popular across the Commonwealth. I would be considered the tail ender, right? The last batsman at the wicket. Hope I don't have to hit the winning run. But seriously though, yes, I am from the Organization of Eastern Caribbean States, which is an 11-member grouping consisting of 6 independent countries, 3 UK overseas territories, 2 French territories. Now, the 6 independent countries, which is Antigua and Barbuda, Dominica, Grenada, St. Lucia, St. Vincent and the Grenadines, St. Kitts and Nevis, they all party to the Paris Agreement, and they've all put out very ambitious NDCs, nationally determined contributions, and within those NDCs, renewable energy features very prominently. I think in the case of Dominica, it's somewhere in the region of 44% reduction in energy emissions by 2030 on a 2010, I think, baseline this year. Now, they estimate, let me also say that the NDCs are primarily focused on emissions reduction mitigation. There is some adaptation in there, but while we recognize adaptation is a priority, I think it's easier for many countries to elaborate the emissions reductions targets as opposed to adaptation targets, because even globally, has proven challenging for some. And the estimates for those 6 countries for achieving the NDCs is based on the NDCs as well as the national adaptation plans. The overall amount is approximately $3.3 billion US. It's still believed to be an underestimate, but it's in the ballpark, recognizing that more than half of that is for mitigation, okay, for 6 countries. Now, the Caribbean is blessed with abundant sunshine. I mean, sunshine, cricket, tourism, and everything of the sort. And you have these ambitious NDCs, you have a number of ambitious policy statements. So you will assume the uptake is easy, but this is where it gets a bit more difficult. In most of the islands, in the 6 countries I'm speaking about, and some of the others, you have a few issues. First of all, the predominant model of financing solar is either self-finance, you pay for your system yourself, or you go to a commercial bank to get the money. And for many people, that is considered to be, and businesses, this is pretty expensive because you have to have a pretty high, the upfront capital costs are pretty high. So that is a challenge, even for the governments who, many of whom know the advantages and can see the cost, the benefits of investing in solar. Many of them are coming out of, for example, out of the COVID crisis and will have limited money to invest, while they're trying to prioritize education, health, and other, other areas in the, other priorities. Not saying that energy is not a priority. Then you have another issue yet with where in many countries, while people would like to invest in solar, even if they can't afford to do it, there are restrictions because in most islands there's a monopolistic system of of power provision where the existing utilities have virtually a monopoly. Sometimes that's written into law, and even the policies will, in some countries you can only put up to 5 kilowatts of solar on your roof if you want to remain connected to the utility, right? So these are some of the challenges, and of course for some people there's still the idea of risk, right? The fear that, okay, how long will it take to pay off? Well, that's another issue. Some of the companies that install, we think, are still charging too much, charging people too much to install. So as you can see, there are a number of factors that inhibit the more rapid uptake of solar. Now, having said that, I can say that some years ago, for example, the government of St. Lucia had put in some tax concessions for people who wanted to do solar water heaters, and as a result, the uptake was quite high. Our opportunities, if they choose to play with the fiscal regime and try to make it easier, there are some concessions, but more can be done. Now, you were asking what the OECS, the Organization of Eastern Caribbean States, has done. In 2001, under a broader initiative known as the Caribbean NDC Finance Initiative, the OECS launched what is known as the Eastern Caribbean Solar Challenge, which is meant to increase or accelerate the uptake of solar or the diffusion of solar PV across the region. And we took a 3-pronged approach where we're trying to work with governments to put more panels on roofs, to work with the private sector, and to work with households. And so the work involves, for example, outreach, education, working with governments to try to improve the fiscal and the policy, the enabling environment, I'd say, in general, and working with businesses to sensitize them, and also trying to work with the financial community within the business sector to kind of liberalize and make things a bit easier for people. And let me just add, by the way, that the move to solar, or the need to move to renewable energy, it isn't necessarily a question of access, because in some countries, over 90% of people have access to the grid. But the cost of energy under using conventional sources is high, and with the current crisis with fuel prices, it's making it unaffordable for many. So that is one of the key reasons why we want to transition. It's also the fact that we want to end a dependence on imported fossil fuels, which of course is the emissions are bad for the climate. So it is not necessarily a question of access to energy in principle. It's really affordable access and sustainable access okay, and equitable and fair access. So these are some of the issues that are driving this, as well as our determination to show leadership in the fight against climate change. So yeah, so back to the Eastern Caribbean Solar Challenge. What we've done, we focus on education, we focus on engagement with stakeholders, providing technical support, market analysis. For example, we've identified, for example, that the lease to own and other models can greatly ease the burden on the recipient. For example, you can, if you use an ESCO model where the energy service company takes on part or all of the investment, that is easier, so they can recoup their costs through the savings made. So there are other models which we're now trying to popularize. And with at least one or two partners, there's actually been the provision to governments of support for in terms of panels on roofs. So on public buildings, hospitals, schools, etc. But there's a lot more needs to be done if we have to achieve some of the targets that we have set. So, this is the kind of thing that we're doing. We're trying to take innovative approaches. But let me say that one of the critical issues that we have in trying to deliver on things like the solar challenge is the one board is the capacity to do this. My team is a small team. We do not just solar or at least renewable energy from a climate perspective. We're also doing resilience at community level and so on. And so we are stretched. And I think while I really want to commend the Commonwealth for the finance advisors, we've seen the benefits. We're based in St. Lucia. I know the good work being done and in the region. But I think it's also time for us to look, for example, ISA could probably start looking at providing renewable energy advisors to work to be embedded either within the country or within regional organizations like the OECS, so to help to take up some of the slack and to help us to move to propel them, the agenda. So I'll stop it because I could say a lot more, but I don't want to split it up.
Wonderful, wonderful. I'm sure the audience, you've had enough of me. I want to invite Dr. Oldman Koboto and Mr. Ramesh Kumar from ISA to moderate the next session, where we would allow questions from the audience. And want to ask you, panel, to be patient as these two gentlemen come and they moderate questions from the audience. So Oldman and Ramesh.
Thank you very much, the event moderator. The floor is now open for you to ask our panelists any question you wish following the presentations. The floor is open. Online. There is a question online. Please go ahead. Yeah, please go ahead, Mr. Sahi.
Yeah, good afternoon. Is Desh Sahai, representing Tonga in India as the Honorary Consul. Her Excellency, Secretary General of Commonwealth Secretariat, His Excellency Dr. Ajay Mathur, the organizers of this session. This is the most, and the panelists. First of all, many thanks to the Commonwealth Secretariat and the International Solar Alliance for organizing this very, very important topic, of financing for solar projects. Now, financing, you see, there are two issues. On one side, when the credit institutions, banks, they want to lend the money. They make money by lending to projects, and everybody, all these institutions are mandated to provide funding to these small and micro enterprises Now, I must add here that majority or many of the countries in Commonwealth are comprising of small states of Caribbean and the Pacific, where I had the pleasure of working in both these areas earlier in my career. You see, the problem is that the bankers are not sure whether the borrowers will be able to lend to return the money. And for this, I think they want to make sure, number one, that the project is viable. Number two, the entrepreneur has the capacity to run the project properly. And third, it is most important, it is profitable. It will be able to generate enough funds to repay. You see, I must congratulate International Solar Alliance that they have moved systematically on this in this area by creating by capacity building, by organizing bankers training programs, wherein the bankers are trained. They are taken through all the phases of project formulation, their appraisal and all, so that they build the confidence. Now, in regard to the repayment and for the credit guarantee, there used to be credit guarantee scheme, for example, in many countries where there used to be export credit guarantee scheme for exporters. Now, later on, this has been provided to local manufacturers, but I think what is needed to be done is that this kind of risk capital facility, which the Director General mentioned, it is very important. And I suggest that there should be some special funding for the small states, island states of Caribbean and Pacific, and then of course of Africa also, for where a certain amount of fund is created for catering to the risk capital. Thank you.
Thank you very much, Sahi. I would open the floor for yet another question. I think that was a comment and also a plea. I will open the floor for other questions as well. Whilst waiting for others to comment, I will also just highlight very briefly that based on what he said from our side as SIFA, we are also supporting in setting up some of the institutional structures relating to the trust funds that can help in mobilizing resources. We have assisted with the Tonga Trust Fund, and at the moment we are also assisting with the replenishment of the Fiji Renewable Energy Fund that will begin to support the projects, renewable energy projects on the ground. And over and above that, in other areas like Grenada, we are also supporting the development of the resource mobilization strategy that will also consolidate the efforts for mobilizing the resources for implementation of their NDCs. We have also provided support in other areas like Eswatini, where we have developed the private sector strategy for engaging the private sector in implementation of the NDCs, to mention but just a few. The floor is still open for the questions. Okay, you wish to make some remarks?
Thank you. Just to supplement to what we were discussing, I'm Ramesh Kumar from ISA for programs and projects I'm looking after. I think I would just to expand what we discussed now. So very important point which Honorable Director General has brought out, that $200 billion and very few has gone into Africa or in most of the developing countries. This is very important aspect to be looked into, and ISA is very much eager to see how it can be done. And we also talked about the solar financing facility. In fact, majority of the risk which Lavanya also has projected, I think taking from that, two important things. For every time when we discuss, people look at, for when we go to a financing community, they say there is no bankable projects. And when we go to the project side, they say we are not getting finance. So I think to break the ice, I think both the things are to be addressed simultaneously. That's what the effort we are doing from ISA. One side, the finance facility is being designed to see that there is a payment security fund as well as the insurance fund. Parallelly, we are also trying to create a pipeline of projects, because the both things have to happen, and some point of time it converges and then the projects really take off. So that's what we are doing it now. And the third angle is important in terms of the capacity building, but which Mr. Desh Sahai also brought out. That component also we are working very parallelly, and in fact more than 1,200 bankers have been trained by ISA to see that the banking people are sensitized how to kind of assess the projects, and so that they are very much channelized to fund these solar projects. And parallelly, we are also addressing the technical part of it, and we have more than 2,700 people have been trained in various technologies of solar. And these things will be expanded. We will take it further so that there is a capacity build up to build up the projects. There is a pipeline of projects created doing the pre-feasibility and feasibility studies. And parallelly, we are working on the solar financing facilities. So all the three components are parallelly going. And as we proceed, I'm sure it will be converting to more and more project implementation. Thank you.
Thank you, Mr. Kaboto and Mr. Kuma. I think we're drawing to a close in our program this evening. I want to thank the panel for such wonderful presentations and answers to the questions. At this point, before we come to an end, I want to ask Dr. Ruth Katumuri, who is the Senior Director of the Economic, Youth and Sustainable Development Directorate at the Commonwealth Secretariat, to come and give us the closing remarks for this event.
Is that for me or for the panel? I hope it's for the panel. Thank you, Amex. I don't want to stand between you and what you have planned for a Saturday evening after a very busy and long week. So I just want to add my thanks to the Secretary General, the Director General, and all the panelists for a very, very interesting and informative discussion today. So it is absolutely clear that the finance exists, like Dr. Mathur mentioned, but the problem is with the distribution. And hence, he was also highlighting the need for some of the mechanisms, and that can be developed, such as the creation of risk facility and payment guarantee schemes, which will then develop the guarantees to enable our countries to access the finances that actually exist. So mechanisms, then capacity building. We've heard about capacity building challenges from many of our countries, as well as some examples here. And thirdly, technologies. And we heard several examples of existing technologies here. And I also want to add to that, renewable technologies, we know, not only enable us to meet our climate targets, but they definitely also, we are aware that they also enable economic and social development for our countries, such as the Commonwealth countries, which is where we need to really escalate our to meet our development goals. And in that sense, all the Commonwealth countries are endowed with large amount of sunshine, as well as a large number of young people. So how do we drive innovation through startups involving our young people is also going to be the way forward. We heard some examples of fiscal regimes, and I think these are important in addition to public and private sector. And we heard about some of the initiatives, and these have been trialed in many countries, including subsidies for biogas and these projects. My thinking here now is how do we interconnect all these renewable technologies, especially at the rural level, where there's been an excessive development in technologies, say for biogas, and how do we interconnect with solar as well? So lastly, I just want to talk about some of the programs that ISA is working on, and also the point about how do we embed. So COP27 is implementation, together for implementation. So this again is an example of how we are working closely together and how can we work more closely together through CIFA, through some suggestions that were made here. How can ISA's engagement on the energy aspects of thing work together with our advisors who are based in countries. So let me just mention some of the programs that ISA is focusing on. Scaling solar application for agricultural use. We launched our Living Land Charter, and this fits into that space. We're talking about scaling solar mini grids, solar for green hydrogen, solar parks, scaling solar rooftop, and also a solar PV battery and waste management. Then there is scaling solar e-mobility and storage. To that, I'd like to add not only scaling e-mobility, but scaling solar on mobile transportation as well as infrastructure, because there is opportunity, the technology exists, such as solar panel roads, for example. And in the Commonwealth countries is where many of the urbanization is going to happen at the largest scale in the next decade. So here are definitely all these opportunities where there's a synergy with the Commonwealth Secretariat and to enhance and scale up how we can work together. I will stop there, and I wish to thank all of you for a very engaging and interesting presentations and discussions today, and have a little bit of the weekend that is left.